Good morning and a happy Friday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: earnings roundup, China's 5-year plan, and ECB set up to ease in December. US stocks rose Thursday, rebounding after fresh data showed jobless claims drop and the economy expanded sharply in the third quarter. The Dow Jones was up 0.5%, snapping a 4-day losing streak. The S&P was up 1.2%, and Nasdaq powered higher by about 1.6%. All three indexes are still on course for a sharp weekly loss. The CBOE Volatility Index, a gauge for investors' expectations for swings in US stocks, fell but remains near its highest level since June. In terms of yield, the 10-year was up 6 basis points to about 0.83. Dollar strengthened against most of the G10. Oil and gold both retreated, in Asian equity futures are pointing to a mixed open. 951,000 Americans applied for initial unemployment benefits, down from the seasonally adjusted 991K in the prior week. The decline is a sign that the labor market is slowly recovering, though claims remain at historically high levels. The Commerce Department on Thursday reported that GDP grew at 33.1% annual rate in the third quarter from the previous quarter, after contracting at a 31.4% rate in the second quarter. Those are annualized figures. So those annualized figures show what GDP would do if any given quarter's pace lasted for a whole year. In actual term, that leaves GDP 3.5% below its level from the fourth quarter of 2019. For it to fully recover in the fourth quarter of this year, it would have to grow at about 15.2% annual rate, which is looking very unlikely that it would happen now that we don't have the stimulus, plus this new round of the virus infections that have been growing. Earnings, big tech didn't disappoint when it came to generating sales, with all easily topping revenue expectations, but some were taking a beating in post-market trading after missing on other key metrics. Apple, for instance, came in at about $64.9 billion, a record for its fiscal fourth quarter, but iPhone revenue fell 21% ahead of the release of the newer iPhone 12, and revenue in Greater China slumped about 29%. Shares were down 5%. Amazon posted sales of about $96.1 billion and expects to bring in as much as $121 billion in the current quarter. Operating income is predicted to come below consensus at between $1 billion to $4.5 billion. The shares are down about 1.5%. Alphabet really did well. Shares are up almost 8% post-market. So Alphabet's revenue ex-TAC was $38.1 billion, with the Google ad revenue jumping 9.4% year over year. Facebook weathered an ad boycott, posting a 22% bump in sales to about $21.5 billion. It reached 2.74 billion active monthly users in the quarter, also topping predictions. But the shares are flat. On the downside, Twitter's fall by about 16% was dramatic. So sales increased 14% to 936 million, defying expectations of a 5% drop. User growth was slower than expected, with the service adding just 1 million daily users and 8 million fewer than estimated, and because of which the shares plunged 16%. In other earnings that we looked at was Shell reported boosting its dividend for the after an adjusted profit of about 955 million. It smashed the 449 million estimate. Shares were up about 3.5%. China unveiled its first glimpse of its economic plans for the next 5 years, promising to build the country into a technological powerhouse with a robust domestic market. Without mentioning the targeted speed of expansion, the Communist Party's Central Committee stressed the need for quality, sustainable growth. The nation aims to be a global leader in innovation in 15 years. For all those who did participate in the Ants retail offer, here is some news. Ant's retail offer for its Shanghai listing was 872.31 times subscribed. This is according to a statement from the stock exchange. Let's see how that allocation goes. Lastly, on the FX front, the European Central Bank left monetary policy unchanged today, but Euro sold off aggressively after President Lagarde confirmed that more easing is on its way. They are looking to recalibrate all instruments at their next policy meeting, according to the ECB president. The market thought that there was a small chance of a proactive move at yesterday's meeting, but Central Bank said they'll be using the next 6 weeks to assess how stimulus is needed. The effectiveness of nationwide lockdowns in Europe and the outcome of the US election will also be something that the central bank will watch. Had they eased yesterday, European markets would have soared, but any positive market flow could quickly disappear on US election day, which is just around the corner. In order to ensure that their actions had durable impact on European assets, it was indeed smarter for them to wait for a time when their potency isn't diluted by other bigger stories. So that's the update. Stay safe, healthy everyone, and have a lovely weekend. And I'll speak to you on Monday. It's going to be an exciting week next week. Thank you.